Introduction: the silent warning. For decades, the world's most powerful financial institutions, our central banks, preached one gospel: gold was a relic. They called it a barbarous metal, an outdated anchor that modern economies had supposedly outgrown. For years, they dismissed it, selling off their reserves in a world of sophisticated financial instruments and digital transactions. But a fundamental shift, a profound betrayal of that conventional wisdom, is underway. Something extraordinary and deeply alarming is happening in the quiet corridors of global finance. The same central banks that spent decades dumping gold are now buying it back with desperate, record-breaking urgency. In 2022, 2023, and 2024, they purchased over 1,000 tons annually, more than double the rate of the preceding decade. They're not just buying, they're hoarding, and they're doing it quietly, secretly, through channels that bypass official reporting. This isn't a story about market cycles or investment trends. This is a story about survival. When the institutions that manage global finance start stockpiling the one asset that governments can't print, freeze, or manipulate, they're preparing for something far more serious than a recession. They're preparing for the collapse of the paper-based system they helped create. Their actions are a screaming, undeniable warning that the financial architecture built after World War II is no longer reliable. The only question is, are you listening to the sound of the vaults slamming shut? Crown-wide central banks are buying record gold reserves. Central banks are buying gold at record, unacknowledged rates, not as a routine investment, but as a survival insurance policy against geopolitical and systemic financial risk. Shattered trust. The freezing of $300 billion in Russian central bank assets in February 2022 by the U.S. and its allies was the catalyst. This action shattered an assumption that government-held foreign reserves were invulnerable. Central bankers globally realized that their reserves, denominated in dollars or euros and held in foreign banks, were now weaponizable and could be seized or frozen with a few keystrokes if geopolitics shifted. The sanctions-proof asset, gold, especially when held in a nation's own vaults, cannot be frozen, seized, or deleted from a computer system by a foreign power. The buying spree is a direct, rational response to this realization, converting vulnerable paper assets into sanctions-proof physical metal. Loss of confidence. The sustained, urgent buying signals a profound loss of confidence in the dollar-dominated financial architecture itself. Central banks are moving wealth from a system they helped create and can't fully control to the one asset they can physically possess and that has endured all crises. The move isn't about optimizing returns. It's about feeling safe when everything else feels dangerous. Covert accumulation. The significant portion of buying happening in the shadows, 78% of demand being unreported in early 2025, with major players like China buying 10 times what they admit, proves this is a strategic, desperate rush. They're hiding their moves because transparency would trigger the very crisis they're trying to avoid by signaling market instability. Shield how gold protects against currency collapse. Gold's protective quality stems from its nature as a tangible, neutral, and unprintable form of money, making it the ultimate store of value against the erosion of paper currencies. The anti-print asset. Gold is the only asset that governments can't print, freeze, or manipulate. Fiat currencies fail when governments print money to pay unsustainable debts, leading to inflation and a collapse in purchasing power. Gold, with its finite supply, remains a stable anchor of value when paper promises fail. Defense against debt cycles. The script highlights the mathematical impossibility of repaying massive global debt levels. The only outcomes are default, which destroys creditors, or inflation, which destroys the currency. Gold survives both. It is a hedge against the inevitable reckoning of debt-based economies. Neutrality and trust. As the ultimate neutral asset, gold transcends borders, cultures, and political systems. It provides a stable foundation for a monetary system because no single nation controls it. No political system can debase it. When the trust that holds the global financial system together collapses, gold is the only physical value that remains. A price floor for paper money. The dramatic rise in gold prices, over 100% between 2022 and late 2025, is a direct consequence of this structural, long-term central bank demand. Rising gold prices are a clear signal of falling confidence in paper money systems, demonstrating a real-time devaluation of national currencies. Dollar banknote, what it means for the U.S. dollar's global dominance. The central bank gold rush is a direct move to undermine and ultimately create an alternative to the dollar-dominated financial architecture. Historic reversal. For the first time since 1996, central banks collectively hold more gold than U.S. Treasury securities. This is a historic reversal and a clear signal of loss of faith in the ultimate safe asset, American debt. Erosion of support. Central banks are quietly dumping U.S. Treasury bonds because they've lost faith in the sustainability of American fiscal policy, debt, deficits, political dysfunction. This withdrawal of the captive buyer base for American debt will dramatically erode the structural support for the Treasury bond market, making it harder and more expensive for the U.S. to finance its operations. The BRICS strategy. The script identifies the BRICS nations, Brazil, Russia, India, China, South Africa, and their expanded membership, as the leaders of this transformation. They are a coordinated bloc working to create a post-dollar world. Their initiatives, such as BRICS Pay, are designed to bypass the dollar entirely for trade and settlement. The new monetary anchor. Gold is the anchor of the BRICS strategy. To successfully challenge the world's reserve currency, an alternative needs a stable, universally accepted store of value. Gold provides the stable, unmanipulatable foundation that paper currencies cannot. The end game is a multipolar monetary system, with gold at its base. Chart increasing the connection between gold, inflation, and debt cycles. The core connection is that gold is the escape route from the unavoidable endpoints of excessive debt and inflation. Debt inevitability. Every empire reaches a point where it's spending beyond its means, and its debt becomes mathematically impossible to service with actual economic growth. The choices are forced: default, breaking the promise to pay back the loan, or inflation, printing new money to pay the debt, thus cheapening the value of all existing money. Inflation as currency destruction. Inflation is the ultimate destroyer of wealth held in paper assets. As governments print more money, the purchasing power of their currency declines. Gold's value, however, is not tied to any single government's printing press, making it the superior value holder during periods of high inflation. Cyclical pattern. The script suggests central banks are seeing the same mathematical certainty that has ended previous empires. Massive debt inevitably leads to currency collapse. They are positioning against this outcome, knowing that the paper promises will become worthless, signaling the unthinkable. The price correlation is explicit. Rising gold prices reflect falling confidence in paper money systems. The scale of institutional buying is directly proportional to the perceived unsustainability of current debt-based economies. What history shows when empires start buying gold again? History offers a chilling precedent for the current gold accumulation, suggesting that it is an institutional admission of systemic failure in preparation for a monetary reset. The end of empires. The script draws a direct parallel. Every empire that debased its currency eventually faced the same choice. Examples cited include Rome tried to maintain confidence in debased silver coins until trade rejected them. Spain flooded the world with silver until inflation destroyed its domestic economy. France issued paper assets until citizens demanded real value instead of promises. The loss of faith. In every historical case, The end came not when governments confessed failure, but when the people and financial institutions lost faith in government money. That loss of faith is what central banks are preparing for now. Institutional hypocrisy. While publicly promoting their stable currencies, central banks are quietly hedging against the collapse of the very system they manage. This is an admission that the rules of the game are about to change. The survival calculation. The speed and urgency of the covert buying, involving massive logistics, new vault construction, and dedicated insurance products, suggests the shift is not a gradual rebalancing. It's an emergency survival calculation. They're not trying to prevent the collapse. They're positioning to survive it and build the foundation for whatever monetary system emerges from the wreckage of the current one. Conclusion: the ultimate bet against the system. So here we stand at the crossroads of monetary history. Central banks have spoken, not through press releases or policy statements, but through the most honest language they know, the movement of money. And that language is screaming a warning that most people refuse to hear. The great gold rush of our time isn't about optimizing portfolios. It's about institutional panic disguised as prudent planning. When the architects of the global financial system start hoarding the one asset that represents a complete rejection of their own creation, they're not hedging. They're abandoning ship. The secrecy tells you everything about the timeline. The infrastructure investments reveal the scale. The coordination exposes the desperation. Central banks see the mathematical certainty of collapse, where most people see temporary turbulence. They understand that when debt reaches impossible levels, only one asset has survived every reckoning in human history. History doesn't repeat, but its rhythms are undeniable. Every financial system built on paper promises eventually confronts the demand for proof. We are watching that confrontation unfold in real time, measured not in speeches or treaties, but in thousands of tons of gold flowing from vulnerable digital ledgers to physical vaults. The question isn't whether this system will fail. The question is whether you'll recognize the warning before the door slams shut. Central banks have already cast their votes. They're betting everything on the only money that governments can't print, freeze, or promise away.